Welcome, everyone. Welcome to week 4 of our Annuity 101 training series. We appreciate each and every one of you. I know some of you have been here for all 4 weeks. There might be some of you just jumping in today. Some of you have played catch up with the recordings that Jason and Rebecca send back out to you, and we appreciate each and every one of you. Today, we're going to jump right in it. We're very fortunate to have Michael Sams with us. Michael started out his career many years ago. He's still a young man, but many years ago, and didn't sell annuities at the start. Was mainly Medicare supplements, like probably most of you on this webinar are today. But we're very fortunate to kind of hear from his experiences, some insights that he's going to give us. He is kind of where the rubber meets the road. He's in the trenches. So he knows a lot of the things that you are probably experiencing already, and you will experience going forward. So we appreciate his time today. And without further ado, Michael, take it away. Thank you for joining us.
Morning, everybody. Super happy to be able to share. I know what life is like, focusing on Medicare and helping, and there's a tremendous need there. As time goes on, and Kirk really, I'm doing this because he's on the other side of the wall. As Kirk was kind of helping introduce annuities and help us gain comfort, I just know and remember what that journey and that process was like. It was very intimidating. And so that's truly what this whole webinar series is all about, is just to try to help give you the information, to give you the confidence to allow you to take that next step and carry on those conversations that so many of us like to just breeze past because one, we're afraid of what the client might ask. And so I get passionate about this stuff because it's like, hey, I've heard most of the objections. I've heard most all of the client concerns, and I would love to share with you what those are and then also how to answer those questions. We're just going to roll through from some of these things. Some of the things are on the slides, and some of these things I'm just going to go off script a little bit and just share as much as I can, as quickly as I can, to save you guys the time. And so we'll just jump right into what that is going to look like for what are the most frequent client concerns. Before we even hit that next portion, I would love to just share, even if you're hearing some of the same things that Kirk has shared, if we're not currently doing the annuities and we're looking at the comparison of FIAs next to MYGAs, multi-year guarantees versus the fixed indexed annuities, highly recommend keeping it crazy simple and starting with MYGAs. MYGAs are the most plain vanilla. They're so straightforward. I get to tell a client, hey, I know exactly to the penny what your annual statement is going to say. And come hell or high water, this is what you're going to get. You're reinsured, you're safe, da-da-da-da-da. There's no guesswork with that. There's no question marks, I guess is what we would say. And so just keeping those presentations and those presentations as short and sweet to the point. Start with those MYGAs, and the next thing you know, you're engaging in conversations about annuities and about money and helping people without getting into the weeds of an FIA. FIAs, I love them. I stand behind them all day long, but there's a huge hurdle, intimidation factor, because there are a lot of options that you can choose inside of an FIA. So starting with MYGAs, yes, building your confidence to get to those FIAs. So we're going to roll right into some client concerns. Hitting the first bullet here, some of the questions that do come up is, hey, I'm with Raymond James, I'm with Edward Jones, I know that I have fees and I'm used to fees. What are your fees? And I love, initially, I usually not know how to answer how we get paid. And so I'd love to just share with you that that's normally what the clients will say is what are your fees? You're not doing this for nothing, or like word for word. I say, I love the question. When you're dealing with an annuity, there are no fees involved with the ones that we're going to be offering you. If I help you with life insurance, if I help you with health insurance, if I help you with one of these guaranteed contracts, built into the pricing of that product, the insurance company has already factored in that they're going to pay a broker for writing the business. but 100% of your deposit earns that guaranteed interest rate, and you'd never have to account for a fee. So literally word for word, that's exactly what they're asking, and that's what I'm sharing when it comes to the fees as a client concern. Let's hit that next one. How do you get paid? Hit that next one. I've already said that. Is my principal safe? I had a conversation with Sally yesterday, and Sally's like, yeah, I know annuities have a better interest rate than the CD that I'm looking at, but I'm reinsured up to $250,000 by the FDIC with the bank. And so I think I'm just going to go in that direction. I'm like, Sally, I'm so grateful that you're saying that. Insurance companies are not backed by the FDIC, they're backed by the Guarantee Association, and you're also reinsured up to $250,000. So whether you're dealing with a bank or you're dealing with an insurance company, you're reinsured both up to $250,000. I'll take it one step further, that every dollar that a bank brings in, they have to back it 10 cents on the dollar. Every dollar that the insurance company brings in, they have to back it dollar for dollar. If both of them are reinsured to 250, which one do I feel a little bit better about? The annuity is going to be a stronger investment, safer option than even that CD would be. Next one looks like tax ramifications when moving an IRA. I've learned this over the years to be crazy proactive about talking about taxes because while we can't offer tax advice, we do get to address the fact that, Mrs. Jones, a lot of people are fearful of moving their 401k or their IRA because they don't want to create a taxable event. They don't want to screw something up and have to pay taxes. And I get to share, you get to share that, thank goodness, when you are transferring funds from point A to point B, or when you're transferring funds from this financial institution to the next, you are not taking a withdrawal, you are not taking a distribution, and you can't, it is a non-taxable event. And just being able to address that proactively, there's sometimes I found out the hard way after the fact. Yeah, we decided to do something or not do anything because we didn't want the tax ramifications. And I'm like, shoot, I got to build that into the presentation where I'm proactively saying that because they may not say it to you at the time, but you want to make sure they have that information. So that's not a roadblock or a hang up, even though there may not be saying that. I can go to the bank and see my money now when it's at the bank. I don't know that I run into that. We've done this slideshow a few times. I don't know that I run into that near as much anymore. I just let them know that, hey, there's nothing, just pick on a MIGA. There's nothing, there's no fluctuation. And so we can know to the penny what your annual statement is going to say, and you don't really need a monthly or a quarterly update or a statement. We can just rely on, when I give you your policy, I highlight the start date or the effective date of your plan, and you know that right after that anniversary date, you will be getting an annual statement. You also will have a policy or a contract that, again, I highlight everything that we need to know on the first 2 pages. Which include the start date of your plan, how much that you've put into this plan, the interest rate that you're earning, and your free withdrawals. That's what that's going to look like. Okay, so I've got a CD. If I take money out of my CD early, I'm going to be getting a penalty. And so I get to say, hey, 2 options. We get to look at the date that that's going to come due. Oh, it's only going to come due in like 3 months. Cool. Let's just get all of our ducks in a row and we can address it at that time. If you have a CD that's earning, make this up, 2.5%, and it's not coming due for another 9 months, you look at the difference in the interest that you can earn with an annuity versus what you're earning with that CD, and you can say, what is the penalty? Well, the penalty typically is the last 6 months worth of interest. I'm better off paying that doggone penalty and jumping into the higher interest rate, and I'm money ahead. So it's just a calculation, simple math. Nothing I do is sophisticated. I'm using doggone sticky notes to just jot down exactly what I just shared, so that they can see the difference and they see the math in front of them. Sometimes they'll just choose to go ahead and pay that last 6 months worth of interest to start earning that better interest rate. Creature habit. I love this and I use this. I share this every time. It's not like I use it. I share this every time. You know, Mrs. Jones, I get to go through a needs assessment and understand your situation to see your big picture. And so there are many times that we get to see that there's room for improvement. But to be honest with you, the biggest hurdle is we're all creatures of habit. I just address it. I just hit it straight on. We're all creatures of habit. We don't really like change. And I see like the posture change. It's almost like there's a sigh of relief, like, yeah, you're right. And it's like, if you just get to address that, it's almost like it knocks down that hurdle when you just acknowledge that, hey, I'm going to share with you where there's room for improvement. Doesn't mean that you have to make any changes, but being a creature of habit really is a big challenge and a big hurdle. And if you can knock down that hurdle, it allows them that confidence to take that next step and take advantage of a better offering for them. Continuing with some client concerns, my bank always sends me a letter informing how much I have to take out for my RMD. Will this company do the same? So, Mrs. Jones, whether your money is with Edward Jones, Raymond James, Morgan Stanley, with an insurance company, with a bank, it doesn't matter. When you reach the age that you have to start taking out of your IRA or your 401k, whatever it happens to be at the time, when you reach that age and you have to start taking out the RMD, required minimum distribution, that financial institution who holds your money will send you a letter saying, hey, now that you've reached this ripe old age of, you have to start taking out roughly 4%. And with that, we always recommend, Mrs. Jones, that we actually fill out the form that is a systematic withdrawal request form that just says, now that I've reached this age that I'm going to have to take it out every year, why don't I just go ahead and set it up automatically to where I don't have to accidentally forget in a year. And so I expand on this, just letting them know that we're still holding their hand when that time comes. We're not just selling them a plan and leaving them alone. Whenever that time comes that you got to start taking out the RMD, let's fill out this form together. It's going to look like this. They're going to ask you, do you want this money to be sent to you once a year, or do you want it to be once a month? You can do it quarterly or semi-annually. I get it, but most of the time it's monthly or once a year. If it is once a year, what time of the year do you want it? A lot of people will say, hey, I want it at tax time. Others will say, I want it December 1st to go Christmas shopping. Cool, pick what you want. Do you want taxes withheld from that distribution? Most of the time, people choose to have taxes withheld. It's nice that that's just already taken care of. Do you want to receive a check, or do you want it to be direct deposited into your account? And that can be changed after you set it up, but it's nice for them to just you just continue to paint that picture for them of what each step is going to look along the way, really, because if in the back of their mind, these are concerns that they have that they're not verbalizing to you, I love to be proactive and just continue to share the information that I feel they want to know and need to know, that really continue to knock down those hurdles on those client concerns. So that's what it's going to look like for a required minimum distribution. How is interest credited? It is compounded annually. Not much to talk about there. How do you get money out? Mrs. Jones, when you want to take money out of the plan, there are one of two forms that I get to fill out. One says, hey, this is just a partial withdrawal request, saying that I just want to take out one time out of this account, and don't really plan to do this every month or every year. We're going on vacation and I just want to take a nice little chunk out. So I can fill out that form and they can send you the check. The second option is to do the form that I just got done talking about, which is a systematic withdrawal request. Even if it's not an IRA and you're not required to take it out, but you say, hey, I want to supplement my monthly income. Social Security is not enough, and I want every month money to be added to my checking account. You can absolutely do that. And so that's how you get it out. You're not even having to call the company. You're calling us. We get the form that you need. We help you fill it out. You sign it, and we get that money coming to you however you prefer. I already talked about this, bank being insured by the FDIC up to $250,000, insurance companies being reinsured by the Guarantee Association up to $250,000. Annual statements, we talked about that. We already know to the penny what your annual statement's going to say. No need for a quarterly or a monthly statement. You'll just get a statement once a year. When it comes to being proactive versus reactive, I feel like if you don't share certain information and the clients start throwing questions your way, it almost feels like you're playing defense, and it doesn't feel good. I'm just giving my own little 2 cents here, that if you can build into your presentation the things that you already know that they're going to ask based on what I'm sharing with you now, and just keep knocking those hurdles down to where it doesn't feel like, oh, he's got a good answer for every objection I have. No, we're not even really looking for objections. We're not even looking for hurdles. We're just knocking those down before they ever come up. And so one of those things is talking about being a rating. Clients really don't get into asking, well, what's this company rated and what's that company rated? But with the order of the operations or the order presentation that I share, as I get to say, hey, not only are we dealing with a great company with a great history, with a great rating, we're also reinsured up to $250,000. And so we're just establishing that in the middle of the presentation. And so they're really not even asking what that company is rated. Keep rolling from there. Yeah. And so Lady Di has retired, but she used to be here. And she would say that the rating of a company always seemed to be a hurdle for her, or a company that wasn't rated, yada, yada. And so I literally just shared exactly what I just shared with you guys with her. And she felt like it really helped her with her presentations and overcoming that hurdle or objection about what a company is rated. Yeah, so order of presentation is important. I'm going to really expand on this. As time has gone on, you feel like you know where you lose clients' interest and you lose the sale, if you will. And so I love to just share first 2 questions I love to ask. The only 2 questions I feel like need to be asked. Mrs. Jones, when do we plan to use this money? Like, when are we planning to start drawing on this money? Second question, how much do we plan to draw at that time? So if we're establishing up front when they're planning to draw and how much they're planning to draw, we can then match a plan and a product that's going to fit their goals and their needs. So you're asking these questions first and then matching a plan and a product to go with that. Cool. And as you're hearing of the plan features that are meeting all of their goals and their needs, you're establishing, hey, you need, make this up, $1,000 a month out of this. You really don't plan to start drawing on this for another 2 years, but when that kicks in, you're going to want $1,000 a month. Cool. Well, guess what? This plan's going to give you, fill in the blank, $1,500 a month, more than you say that you're going to need. You are not required to take out the $1,500. It's just you can take up to that amount. And then again, you just keep going through, hey, we got some penalty-free withdrawals, da 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 da. You just move through, and then at the end, this is what I'm trying to get to. I get to say that there are 3 types of these plans. There are variable annuities, which is like a cuss word. There are fixed annuities, also known as MIGAs, and there are FIAs, fixed indexed annuities. I can't recommend the variable annuity. You can have a 5% guarantee and be charged up to 6% in fees. It's kind of hard to recommend that, but I can stand behind the fixed annuities, which is the MIGAs, or the FIAs. I love to share the word annuity at the end of the presentation. If I throw the word annuity in too early and I haven't had the opportunity to explain the difference in the types of annuities, in the back of their minds, they're saying, hey, I've heard some things that are good. I've heard some things that are bad about annuities. How do I know if this is good? They're not even listening to what you're saying, to where you get to explain the ins and outs, the ups and downs, every detail about this product and how it fits their need before you have them shut their ears off or their brain off because you used the word annuity and they didn't have the proper education. So saving that terminology of annuity towards the end of the presentation, highly recommend. Prior to, I'm sharing these guaranteed contracts. That's what we call them. That's what they are. Guaranteed contract. So order of sharing that information is very important. What looks next? Length of term. Yeah, that's almost the exact same thing. Now, Mrs. Jones, towards the end of it, we've gotten through the free withdrawals, how it fits their goals and needs. At the end of it, Mrs. Jones, they're going to give you this guaranteed interest rate. Let's pick on right now, Heartland, 5.45% on a 5-year deal. I get to say, Mrs. Jones, no, they're going to give you this 5.45% for the next 5 years. When we reach the end of that term, whatever the best interest rate is offered at that time, we'll be able to help you capitalize in transferring to that new plan, and again, taking advantage of whatever the best rate is at the time. When we reach the end of that 5-year term, if you say, hey, I'm buying a motor home and I'm touring the country, you can do that. Just knowing that the money is going to be footloose and fancy free at the end of that term. So if we start with, and I'll just tell you a failure of mine, I used to have a flyer that had a big old fat 5 in the background of this page, and it's just a 5-year, and it would have all the features of this annuity. They'd see 5 years and they'd think, hey, I'm 79 years old. I may not live 5 years, and they're not even listening to what I'm sharing after that, because they're just shut down with the whole 5-year. Share the length of term, share the word annuity towards the end of your presentation when you have an opportunity to share all of the fun facts about that plan. We have rolled through the whole slideshow. How fast did we do that? Pretty good, 20 minutes. And this whole thing is for you. I know Kirk's going to jump in there real quick. The whole thing's for you. There's no dumb questions. I'm an open book. Ask anything you want to ask.
Jason, I don't see the questions, so if you want to address them again, if there are any, that'd be great.
How did you get leads?
Yep, love it. So for myself, we had a Medicare supplement client base. Started just knocking on doors. And I've never purchased a lead for annuities. We actually do some retirement seminars where we just say, hey, if you're planning, well, this is what you need to know in preparation for retirement. And we just share education about the parts of Medicare and yada, yada. And then we do touch on retirement savings and some options that you can consider regarding 401k rollovers and such. And so a lot of business will come from those retirement seminars, but most of it is just people that are in need, are needing help with Part D and needing help with Medicare and the ins and outs. And we're just, they're almost, guys, you almost won't believe this. There's almost a sigh of relief when these clients realize, oh, you can help with that too. And you're sitting there saying, yeah, how much money have I been leaving on the table in the past because I just haven't even mentioned that that's something that I can help with.
Deborah asks, is there a script that you work from?
Gosh, no, it's a learn the hard way script, honestly. I work off of a client needs assessment to where I get to ask 10 questions to better understand, and we have that on our website, better understand your big picture. And this is exactly how I say it. I think what everyone needs, if you've ever seen the movie We Bought a Zoo, you need that 15 seconds of courage. Comes right off of that movie. The 15 seconds of courage is your 15 seconds of a transition. Why in the heck am I getting ready to ask you these 15 questions? So that's 10 questions. 15 seconds of courage, 10 questions. And so when I ask those questions, I'm sitting there saying beforehand, I'm saying, hey, Mrs. Jones, in order to make the best recommendation for you, I'm going to ask you a handful of questions to better understand your big picture. When I see your big picture and understand what you have going on, I will feel very comfortable making a recommendation for you. That's that transition leading right up to that client needs assessment. Any hospital stays, any surgeries in the last 2 years? That's the first question. And then we just roll on from there. All right, next question looks like.
Okay, Veronica, this is a hypothetical. If someone has to go into long-term care and they have to do a spend down, how will this affect their annuity? Is there a script that you work from?
Yep. So the annuity is considered an asset. I don't care if it's an IRA, 401k, regular savings, doesn't matter what kind of money it is. And so Medicaid will not kick in until they get to a certain threshold. And so you guys know how that works with the Illinois partnership, or just say the partnership program. That's a whole nother category, but they would essentially have to utilize the funds out of these contracts. It's not like they're protected from, and then we've got to utilize the money out of these contracts before Medicaid is going to kick in.
Okay, Dale, my sister-in-law has an annuity quote for 7% from a sketchy agent. After 7 years, guaranteed 7 to 10%. Thoughts?
Yeah. So there are annuities that will focus on specific things. Accumulation may be one main goal of one. Income for life may be another. And there's just different categories we can talk about. There are some annuities that say when we're looking at guaranteed income for life, they have these different silos or different buckets on how you can earn interest. And if I start taking a guaranteed income, it comes out of this bucket. If the good Lord calls me home, it actually comes out of this bucket. It gets very confusing, and they can show these numbers of 7%, like you're saying, a guaranteed this and that. It's not the cash value. I think that's the most important thing. It's not the cash value. So we can show 7% all day long, but that's what's accumulating this bucket or this silo for what I can draw off of for income. It's not what I can say, hey, at the end of this term, I can take all this cash value. I always love to throw this out there, buy that motor home and tour the country. It's not that. So I know what everything I just said is crazy muddy. It's not like, oh, there's a MIGA out there that's 7% and we're talking about 5.45. There's not. It's a horse of a different color. It's not 100% legit for what information is being relayed or shared with you. I'm not saying it's bad. I'm not saying it's bad, but it's not the way that it sounds. It just requires a lot more explanation.
Okay, Joy, how do you bring into a Medicare appointment that you sell annuities since we're not allowed to discuss any other topics except Medicare?
Love, love, love the question. A fact finder, also known as a client needs assessment, is the thing that allows you to ask questions. There's no harm in asking questions. And so when we typically, for me, and what that will look like is I'm asking all the information, hey, medications that you take, the pharmacy that you go to, all of that, health history. We're going through all of that. We're continuing to go through life insurance. We're going through any IRAs, 401ks, any other investments. So we're gathering that information. We're normally taking care of the need that has whatever need has the greatest sense of urgency. Likely it's Medicare in our world, and likely it's Medicare. And I get to let them know that, hey, there's some other needs on this assessment that I would love to share some information with you about. And information overload is a very real thing. While there's other things that I know that we can assist you with, let's save that for another date. And what I'd love for you to do is just know that we're going to call you. This is our application. We're going to call you whenever that policy and that card hit us, and we'll have you come in. If you don't mind, bring in your most recent statement for fill in the blank, whatever they have on that needs assessment. So it's in a separate appointment where we're not doing the Medicare and that at the same time.
And Andre, can you repeat what you say to your Medicare supplement clients to get them interested in an annuity?
Yeah, going to sound very similar to what I just said is, Mrs. Jones, again, I think everything comes back to the link that Jason just did. It's a needs assessment. The foundation, the reason, the roadmap for how we know what to recommend for you is based on the information that we're gathering, the fact finder, the client needs assessment. And so based on the information that you have shared on your needs assessment, there are a few things that we get to help people with. There's more than a few things that I can help you with. And so what we'll do is take care of the need that has the greatest sense of urgency. And then just know, Mrs. Jones, Mr. Jones, it looks like there's some room for improvement on these things. And I say it right now, we're all creatures of habit. We don't like change. But if there's any room for improvement, I feel like it is my duty to share that with you. Doesn't mean that you're committing to making any changes. And so it's just kind of easing them into, hey, if there's room for improvement, I'm kind of silly not to listen. I probably should take note and listen. This guy's not putting me in a headlock and making me say mercy to make me buy something. You're just continuing that conversation. And next thing you know, they're like, gosh, I gathered a bunch of information and I see where it is a better situation than what I have going on now. That's how we get that topic going and get the interest. Hey, if I can improve my situation, why wouldn't I?
Okay, Deborah, from initial contact to sale, in your experience, generally how long is an annuity sales cycle?
Love it. So again, the Medicare piece is normally always first. You know, the fact finder, call it the exploratory appointment, whatever. You're just gathering information. You're helping with the Medicare piece normally in our experience first. And then it's usually for me, it's on that policy pickup for the Medicare. That whenever they're picking up that policy, they're bringing in statements. We're reviewing those statements, hitting a presentation, doing an application, likely at that time, sometimes later, but likely at that time. And then we just say, hey, you know, the transfer process, if the funds are sitting at Edward Jones, Raymond James, Morgan Stanley, whatever, normally that process will be close to a month. We help push things along with a three-way phone call to make it go a little bit quicker than that. But a month usually before a policy will show up, we call you and let you know that the policy's in, and I go over the policy with you with a highlighter, and everything you need to know is on the first 2 pages of that policy.
Okay, Andrew, are you able to ask the CNA questions and talk annuities on a Medicare appointment?
Yep, I think we kind of answered that. We're tackling the greatest need first, which usually the greatest sense of urgency. I shouldn't say greatest need. The need that has the greatest sense of urgency, we're tackling it first, which is Medicare, and we're saving that financial piece of it, the annuity piece of it, for when they're picking up their policy.
Okay, Monty, if we would like to begin selling, what would be the process to start off, get educated, etc.?
Let me make this super easy. I love this. You hear me ramble on all this good stuff. I'm a Medicare guy that helps people with this stuff as well. I'd like to be doing the same thing, but man, that hurdle, how do I get started? I would say, Kirk is on the screen, I would say that wherever you are, whomever has the best offering for a MIGA, multi-year guarantee, I'm going to pick on Heartland right now because this applies to me, is Heartland's offering 5.45% for a 5-year plan. I would get contracted first. Once I'm contracted, I would, guys, I'm getting into teaching mode. I would role play. I would find someone that you're comfortable role playing with to get 3 role play sessions out of the way. Record yourself on your audio recording on your phone and get some of this learning curve out of the way. You're going to stutter and stumble a little bit on the first go arounds. And then, you know, as you're going through those appointments with the clients, it's hard to get out of the routine and the comfort zone that you normally have. But it's just asking a few additional questions. And for me, it would go like this. Once I'm contracted, once I'm done with my Medicare piece or whatever I'm normally doing, you know, Mrs. Jones, there's a lot of things that we get to help people with. I would say something very similar to this. I know there's a lot of things that we get to help people with. One of those things is just interest rates. Right now, we offer a really good interest rate on a plan that normally will improve a person's situation. And I know from few questions that I've asked prior, pretend like you have, do you have any IRAs or do you have any IRAs or 401k and any other investments? And so you've asked that prior, hopefully, and then you say, hey, if money's in the bank, we can do better than what the banks are offering. And if your money's in the market, we can offer a much safer place for you to park your money, earning a crazy good interest rate. So it almost doesn't matter, Mrs. Jones, whether we're dealing with the banks or we're dealing with the market, there's just a better answer, a better solution with a guaranteed interest rate. 100% safety, no fees, no risk.
Okay, Deborah, what are your go-to leave behind marketing pieces for the client after the appointment?
I honestly, I can't say that there's a go-to. I think that everyone's situation is just a little bit different. Are we going FIA? Are we going MIGA? In this situation, I'm just going to assume that we're all going to start on the MIGAs. I mean this. I use a sticky note, you know, and so you're just saying, hey, this is the amount of money, 180,000 times 5.45%, show the return. And then I show 180,000 times whatever they're currently earning. And when they see that, the difference, like there's nothing sophisticated. I've already said there's nothing fancy and sophisticated about what we do. It's just down to earth. Here's the facts. We can improve your situation. I need to make them feel comfortable about that transition. And so really what I'm doing for you and hoping Kirk is doing for you is just giving you that confidence through making you comfortable Because when you're comfortable, your client is comfortable. And that's really all we're trying to do is continue those conversations, making it comfortable for them.
Okay, Jason, can you go over commissions a little? What might we be missing?
What might we be missing? I don't know that there's anything great to talk about on commissions other than it's a game changer. Medicare pays the bills. The bigger ticket items with the financial stuff on MIGAs or FIAs, that's what gets you into the fun stuff, the bigger ticket items. It takes a heck of a lot of med supps, a lot of Part Ds to come up with the amount of money that you can make doing the annuities. And so wildly competitive. Just here's my sales pitch. It's better for the consumer. They're getting a better interest rate, a safer place, whatever. It's good for you, the agent. It's good for the next generation. I mean, it's a win-win-win. It's checking all of those boxes. I know it's not a one-size-fits-all, but there's so many options with an annuity, so many different companies, so many different plans, so that will meet the goal of the need of that client. That again, it just kind of checks all of those boxes.
A fantastic Q&A again. We're very grateful to everyone on this webinar that you guys participate at the end, and I feel like we get a lot out of the Q&A each and every time. The presentation itself is wonderful, and today was fantastic, but the Q&A, we really get a lot out of that. And I want to thank Michael for taking time out of his day. He's a busy guy, and just real briefly, this is a guy that sold 0 annuities for the first few years of his career. And now he's never going to tell you this, but he's well over 10 million annually on annuity sales. And the way he views it, because I hear him, he's helping people, and then everything else falls into place. So it's no bull on the client needs assessment of addressing each and because everybody is different. Each client is different, and he takes care of them. And then each level of care that he gives to his clients, that is the trust and the reliability on Michael as a responsible agent of helping a family out. And then it just really, it bridges any gap that there might be in when you're talking about somebody's nest egg. It gives them peace of mind, security. So it's not we don't skip steps, and it's not doing things right some of the time. It's 100% of the time. And that's where we, as New Horizons, myself, we make sure that we're fitting that client in the right product. So thank you, Michael, for that. I don't know who asked the question about kind of the sale, and that next week is our final week. And just real quick, we're going to go over a review that'll take some of the time, but then I'm going to introduce a program that I think you're all going to be excited about. And I think when we all learned how to ride a bike, we didn't just take off. I think we had training wheels at the beginning. And when we've come up with a program here, and I'm not going to steal all the thunder for week 5, but we've come up with a program that I think that you're going to like, where I'll just say it, where you're earning commission while you're learning. And I've handpicked a couple agents here to help us with that, and really train and be hands-on and allow you to really, really feel comfortable and get to where you would be sitting in Michael's chair today. So that's all I'm going to say on that, but tune in for week 5, our final week, introducing a program that I think you'll be very excited about. I know we are, and we really look forward to it. And again, thank you, everyone. Thank you, Michael, today. Thank you, Jason, for all the help that you do with getting these webinars going for us, and Rebecca. So excited about it. We look forward to seeing everyone week 5 next Wednesday. Thank you, everyone.